It's a pleasure to be speaking with gold above $3,300 an ounce and the TSX Venture Composite at its highest level since 2022. Hopefully what happens next is not what happened in 2022 at this time. So let's pray for a different outcome, a more positive one with lines going from the lower left to the upper right in the chart. I want to just say briefly that my January presentation here at MIF is still very relevant today. So when I was deciding what I was going to speak about this morning, I said, no, we're not going to do macro because the January presentation is still very relevant, and I feel like we're coming to a very important moment that could arrive next week, next month, 2 months, and then it will be time to, revisit that January presentation. So I invite you to go take a look at that on YouTube. Something is brewing between the U.S. and China involving gold. We just don't know what exactly or how it will look like. All we can do is speculate, wild speculation at this point, but the price action tells a story, and it's a powerful story, and it's a bullish story. So let's get into junior mining, which is, I think, what most of you are here for, junior mining stocks. And my favorite kind of junior mining trading setup, the bull market adjustment trade, the BMA trade setup. And I believe I coined this term. I don't know anybody else that said this prior to me saying it a few years ago. So what is the bull market adjustment trade setup? Let's learn what it is, look at some examples of it, so you can better understand how to possibly identify a future setup when an opportunity arises. So basically, we know what a bull market is, duh, but what is an adjustment, bull market adjustment, right? So this setup is essentially occurs when a stock was previously way under the radar. Not many people were paying attention to it. Usually the stock chart was flat, maybe even a little bit down, and then a major event occurred. And new piece of news, right? Company puts out news. It's usually a drill result. Usually, that's what we're going to talk about today, but it could also be an acquisition. The market might really like a project a company acquires and they think they got a great deal on it. We've seen a few examples of that in the last year. It could be an economic study where the numbers just are suddenly much better than people anticipated. It could be permits even, right? So a major new event occurs, and it basically, allows speculators to speculate how valuable this could be for the company and the valuation of the company in the future. The best bull market adjustment trades occur when the stock was way under the radar, right? It was not widely followed prior to the event, or it was during, it was having some doldrums. The more torque occurs from tighter share structures. Now, this is just basic stuff, right? If a stock has 20 million shares out and it puts out great news, the share price can appreciate much higher on a per share basis than if it has 200 or 300 million shares out. And we'll see some examples of stocks that had more shares out, less shares out, and sort of how the performance was different. So tight share structure, major positive. It leads to more torque. So we like when it's under the radar. We like when it has less than 100 million shares out. Even if it's less than 50 million, that's even better. Broad basing pattern in the chart. So again, like sideways, basing pattern. And the bigger the base, the higher into space, right? So all of those are great, are key attributes for a bull market adjustment trade. And then once the company puts out the new news, the game-changing news, how are they going to be able to follow up on it? So the companies that are able to put out more results, more drilling, more follow-up news, it could also be financing. We'll see a couple of examples of good financings that help to juice the stock even more. And then big potential, so grassroots, like, new discoveries or acquisition of attractive projects during a bull market phase can be big potential, right? Bull market adjustment trade example. So we have the, Hercules example from October, November 2023. I think everybody knows that one. We have Ramp Metals last summer. San, Lorenzo Gold, March 2025. And that, with the SLG trade, that's still playing out right now. So that one is still sort of in the process. So is Ramp, although I think this is like part 2 of their bull market adjustment trade. And then, we have Onyx Gold, which is actually very much in the midst of a bull market adjustment trade right now. And then I'll talk about a couple of candidates at the end of the presentation. So Hercules Silver, it was silver, not metals in 2023. This one is a really cool example because there's so many key lessons from what happened here in October 2023. So the company put out the result, which was this, 185 meters of 0.84% copper in a new porphyry belt in Idaho. It took people a little while to appreciate that this was actually really something new because the silver in the upper plate at this project was well known. So I think on the day of the announcement, a lot of people were skeptical, as they often are in junior mining. They're just re-drilling something, And that's why it didn't run that much. I mean, if you think about porphyries, when you get almost 1% copper in the first hole into it, that's pretty exceptional. In Idaho, in the US, I mean, immediately you would think at least 100 million market cap, just for starters, right? But it kind of oscillated. The share structure wasn't super tight at the time of this announcement. I think they had over 150 million shares outstanding at that time already, which is not a low amount for like an early stage company. So it took a while to get its footing. And in 2025, a while is a few hours or a couple of days. That's a lot of time in 2025, right? So even on the second day after the news, the stock traded negative very briefly on the morning session down to 29 cents. So there's plenty of opportunity for speculators who were able to put this news into context to get in. And then you see what happened next, right? Look at that move. And we're just talking about the bull market adjustment trade. So we're not doing a full update on the company, but you can see that was a 5X in less than 2 months. That's pretty extraordinary. I think we would all like to have trades like that on a regular basis. And what really helped to juice it was after the result of hole 2305, which was great, the market's always going to be worried about financing, right? So you've got a new discovery, you got to drill more. To drill more, you need money. So as soon as they would look at the balance sheet, see the company has $2 million or so in its treasury, they say, oh, well, they're going to need to raise money, right? And so this announcement took away that concern. Barrick Gold, $23.4 million, and just above market price. So this is what every junior mining company dreams for, is you get a big mining company to cut a big check, take a large stake in the company, and do it at above the market price, right? That is nirvana in the mining business, right? And so that helped to really trigger the short squeeze. We'll talk a little bit more about this later, but you can see early November, the stock was still below $1. And then within a couple of weeks after the Barrick news, it went to 162. That was a short squeeze, or at least part of that was a short squeeze. Ram Metal. So this was, in some ways, this is my favorite of this group. New discovery in Saskatchewan. When the company drilled the hole, they didn't even realize what they had drilled until they got the assays back. And you can see the days prior to the announcement, it was trading down. So nobody knew about this news. This was a total shock, including to the company itself. I love those setups when nobody knew prior to the announcement. And you can see the share structure was super tight here, right? So it was a nice base. It's way under the radar. Nobody was following this thing. The company was exploring for PGEs, not gold, right? And they drilled 73.55 grams per ton over 7.5 meters in a new discovery. And you can see what it did to the share price. So it goes from 14 cents to 90 cents in a week. Yeah, I think that's a week. And then there was some volatility, but that's a hell of a move, right? And so that was because it was so under the radar. It was so shocking. 73 grams per ton gold over 7.5 meters is pretty extraordinary. And the tight share structure helped a lot, right? And then they were able to do something similar to the last company. They were able to get a big investor to come in and finance them at a much higher share price, right? So they were able to raise money at 4 or 5x where the stock was trading at prior to the announcement, and they got Eric Sprott in, right, which is a big validation for a small exploration company, right? And now here's where I'm today. I haven't updated it to this morning, but you can see it's above $1. Had some volatility, recently dropped to 80 cents and then moved back up to 150. And this is now in phase 2, right? So it took a while for them to get back out there. When they made this discovery at the Ranger target, they had just drilled one hole and they had already left the camp when they got the assays back. So there was no follow-up news aside from the Sprott investment to really move the stock higher. So that's why it went through that big oscillation period throughout the end of 2024. But now they're drilling again, and new VMS, discovery at the Rush target, right? So Ranger is one target. This is another target, VMS. So it's not really high-grade gold, but it's copper, it's silver, it's gold, lead, zinc. And here's some drill core from one of the holes at Rush. You see the massive sulfides there, chalcopyrite. Pretty easy to spot. And this is still ongoing, right? So ramp is one I think should be on people's radar. It has run quite a bit, but something's happening here. San Lorenzo Gold. So this is in Chile. This was way under the radar. Look at that chart prior to the gap up. Not much volume, not much movement. Looks super boring, not interesting at all. If I looked at that chart, I'm not buying that stock, right? And then they put out a new discovery at a porphyry target in Chile, 153.5 meters of 1.04 grams per ton gold. And this was unexpected, right? This company doesn't really do any marketing. Nobody knew about this company at the end of last year when they started to drill. Now a lot of people know about it, right? Because of that result. So it gapped because the share structure was so tight and it was under the radar. It gapped from 7 cents to 20 cents on the morning in the news. That's almost a 200% overnight appreciation. And that's largely a product of the fact the share structure was so tight. And then you can see speculators caught wind of the news in the subsequent days, and there's more speculation about how big this porphyry could be. They've got multiple target areas, blah, blah, blah. And it goes from 20 cents to 45 cents. And now it's been in a period of consolidation because, go back to that first slide where I talked about follow-up news and catalyst. They weren't able to follow up with a great drill result. So they announced more assays in April. Market didn't think these results were quite as good as that first one, although this is a different target area. So the first announcement was from the porphyry target. This is a totally different one. But 4.5 meters of 6.5 grams was not as good as 150 meters of 1.04 grams, right? So also the drilling had stopped. The company is not in the process of drilling right now, but they will be next month. So San Lorenzo Gold on my radar for June when they mobilize the rig back to the Salvador project in Chile. And Onyx Gold, this is in Timmins. Now look at this one. You can see where the news was just by the big gap and move up in the chart. So we have a consolidation here, pretty under the radar back in early April. The market knew this company had less than $1 million in its treasury at the time of the announcement. And the share structure here was pretty tight. I think about 50 or 55 million shares out at the time of the announcement. And here's the result. So this is a new discovery in a step-out zone to the north at their project in Timmins, 3.4 grams per ton gold over 69.6 meters. And that is such a step change versus the results they had from prior holes that the market really loved this because they're stepping to the north, they're hitting higher grades over wider widths, and speculation starts to occur about, well, how big could this be? They have a fault structure that extends over 5 miles on their ground, so they can keep stepping out along that. Maybe they can keep hitting, right? And then they drive in the warrants, get money in the treasury, so there's less of a financing concern. And now, just yesterday, they announce a big financing with what appears to be a corporate taking a piece of this. And they announced this morning that they remobilized the rig to the project. So they're drilling, they've got money, and the stock is above $1, right? So the bull market adjustment rate is really in progress in Onyx. But you got to realize after a stock runs from 25 cents to $1, that's a pretty big move. It's pricing in some positive, results in the future. So we have to gauge the downside potential if the subsequent holes don't turn out as good as that one, versus the potential upside, right? So these are all things that we need to do as investors, gauge the risk versus the potential further payoff for ourselves. And then some things to watch for. So in Onyx and in Hercules, shorts came in after the good news came out, after the stock had run a bit, right? And this created the potential for a short squeeze. With the Hercules one at the end of October, clearly some people were thinking they were going to have to go to the market to finance. When Barrick wrote the check, they didn't have to anymore, and that set that short squeeze in motion from $1 to $162 in a few weeks. With Onyx, we're seeing something very similar. The stock went from 60 cents to now over $1 here this morning because they were able to finance on favorable terms. So watch the short interest in these bull market adjustment trading stocks. Some things we want to watch out for and understand: what's the size of the potential prize. Always important to be gauging what the potential is. What are the expectations of the market? Very important to gauge that, because the company might think they have a good result, but the market expectations could be far above that, right? So you want to gauge what the market expectations are, not really what the company's expectations are. And then as more data becomes available, what does the accumulation of data show, right? So the best ones, like the Great Bears, the Philos, they're able to consistently just keep hitting. It's not a one-hit wonder. And so we want to watch for that. Also, the share structure is very important to understand, including free trading dates, warrants, options, and then always be asking, when's the next financing, right? So these companies were able to give a good answer to that question, and that helped them to keep their stock running. And this is a list I came up with, a dozen bull market adjustment trades over the last decade. And there's a lot of information there, and you probably know all of these companies in one way, shape, or form. Most of them have had very good outcomes or still having good outcomes. Still, there's a story, left to right for 9 of the 12. 3 of them have resulted in buyouts that are very well known. But the big takeaway here is that with these really great stocks, these companies that made, a new discovery that was a major game changer and proved to be economic or likely to be economic, the best move for an investor was actually to hang on, right? To hold it as long as they could. It didn't always work out. There's 3 examples on this list of 12 where the stock price is now well under where it was on the day of the major event, but 9 of them are well into the green, right? So you need a good sample size. You got to have at least a 10 sample size. But the data says, with the great ones, the way you have good returns over the long run is hanging on. It's not easy, though, because these are very volatile stocks, right? And they shake most people out, along the way. Like Great Bear, like Philo even. So I'm just going to end it with 3 ideas. So these are not buy recommendations. I'm not telling you to buy these stocks right now. I'm telling you that these stocks are on my radar, and I'm going to be following them closely in 2025. So Kingfisher Metals, Rua Gold, and American Eagle Gold. So Kingfisher Metals is in the Golden Triangle. This is a go big or go home kind of stock and a project, right? I think that the chance of failure here is not small, but the potential prize is also not small. It's actually quite large. They're in the midst of a financing. They have very strong financial backing, and they'll be drilling by the end of June at their Golden Triangle project. The New Zealand play, Rua Gold, they're drilling right now. The drill program is ongoing. There's assays pending. New Zealand is pretty far under the radar, not well known for gold mining, these days. So that's kind of interesting to me. And American Eagle Gold, Tech and South 32 are shareholders of American Eagle, and they'll be drilling in a couple of weeks in BC here with $35 million in their treasury. And I like the charts. Kingfisher's in an uptrend, but consolidating due to the ongoing financing. Pretty good consolidation base there in Rua, and the same with American Eagle. And I'm done. Thank you. And if you want more of my content and find that presentation from January, it's on YouTube at Goldfinger Capital.